Mark Yegge. Welcome to another weekly stock market update. Today is December 16th, 2023. I think it's the 15th actually, but I'm up 12 hours ahead because I'm in the Far East. But anyway, happy December 15th. And anyway, we got a green market. Like, I hope you're feeling it in your portfolios because this is kind of what we wait for, right? This is a very green market. We went green. Gosh, it's been a long time ago, going on a couple of months now. But when we make a green call, they don't always work. But most of the time, when we say that the market's going green, they go green, and that means you should be on the bullish side instead of I've got a good buddy that shorts this market, and I'm like, you can't be short in a green market. Like, I don't know what you're thinking, but I hope he's doing okay and got out. But you got to be playing the trend. The trend is your friend, and you don't want to fight the tape. The tape's going down, you want to be down. If the tape's going up, you want to be up. Right now, we got a big left to right check mark going on, and it's great. Let me share with you some things that we just talked about in my mastermind group. And you can look at this chart, and it is absolutely amazing, right? So I've extended out this little channel, and you can see yesterday it hit the top of the channel almost to the penny, and now it's within that channel. So it's spent a little bit of time over the last month or so, maybe before that, kind of outside the channel on the downside, and then it recovered that as we went green. And look at how long the market's been green. It's been green since basically November 7th, I think is the date. So that's more than a month, kind of moving toward 2 months. Now, they don't last forever. They kind of do some correcting, but because the Fed is making some intimations that they're not going to be raising rates, at least Jerome Powell said that. Somebody else came out today and said something different. But they're saying we're not going to raise rates. We might even be cutting. The base number of cuts, which is crazy to me, is 6. That's what the odds makers are saying. 6 cuts next year. I don't see 6 cuts next year. I see what the statistics show probably be about 3 cuts next year. Nonetheless, they're cuts. When they're cuts, that means more money floods into the economy. They're printing money anyway to pay off this debt, but the problem is the debt's going to pay other countries that hold the debt. They're paying the interest on it. But be that as it may, they're printing money. Somebody's getting rich when they print the money. It's probably the defense contractors from all these wars that we're getting involved in. But I digress. So we've got an up market, and you need to play it like that. The market is long in the tooth. I will tell you that the probabilities say at some point it's going to correct, but we don't know when that is. I'm not Nostradamus. I don't know. You don't know. Nobody knows. When it does, it does. But right now, it's going to correct within a green trend, within a bull trend, which means it's going to keep going higher the way I read it. It's been going higher all year, by the way, guys. And I called the bull market on January 9th this year. And I said, it's time to buy. And some of you listened and some of you didn't. And the ones that listened, you're doing all right, I hope. All right, so you can see that this has totally broken the trend. This is the NASDAQ. It's broken the trend of 3 lower swing points. The 14,446, the 14,149, and 13,714, I think it says. And you can see that if you draw a little imaginary line across that, there's a trend line that got broken. And then it got broken with energy, with gaps up. And it got broken with breaking above the 50 and above the 200-day and gaps up, and now gap above the highest swing. And there's a lot of good stuff going on in this chart. And this chart is taking us higher. Look at it, 5-6 days in a row on high volume. That's what you want to see in a bull market. That's what we got going on right now. It's a Santa Claus rally for sure, but there's no reason to try to time it and think you're going to short it, because it can be a bull market a lot longer than you can be wrong, right? So take a look at that. This one looks like the exact same chart. This is the S&P 500, blew through its 4607 swing point. On volume, it's going higher, or it has been going higher, and it's doing it on volume. I mean, we're going to get some correcting days for sure coming up, but this market trend is going higher, and the trend is your friend. All right, same thing with the Dow. Look at that. Now this one, if you draw that line, that's too steep an angle, right? I mean, it's incredible momentum. All the volume bars on the right side of the chart are skyscrapers. They're sticking above the moving average. There's tons of action going on, lots of gaps up, lots of energy, especially this week. And it's a little extended, I have to say. It's that kind of an angle where it's almost like a straight line up. It's a little bit extended. So we're due for a little bit of a correction, maybe back down to the 30, I think that says 36,000 level, 38,000. What is that? 36,000 level, maybe 36.5. But we are in an uptrend. Make no mistake about it. Look at this golden cross that, basically is kind of just happened, unless it never got to the death cross. But that, that's where the red line crosses the black line on the upside. That's a golden cross. We got that in place. This is a golden cross happening today on the New York Stock Exchange. And look at that chart. That was the laggard chart of the four, and now it's caught up. It's broken through a swing point on volume. That's telling you this is going up. This is green, guys. This is what a green market looks like, a real green market. Now, if you look on here, every green market has some red periods in it. But this thing predominantly, if you draw a channel, that channel is from lower left to upper right. Volatility, I had to put this on a weekly so you could see how far back it goes. We are now at a level where it goes back 3 years to get to a swing point of 1142 to even test that swing point. So we are getting into at least records for the last 3 years of low volatility, which means money is flooding back into the market. And you can take a look at the Treasury. The Treasury yields are crashing, which basically means that it doesn't matter what the Fed does. The market's telling the Fed that the Fed is going to have to sell, or lower rates, not sell, but lower rates. Lower rates is driving up treasuries. So treasuries are gaining value again. That's driving the banks higher. When the banks go higher, the markets go higher. That's just the way it works. And so the banks are going higher and the markets are going to go higher. Doesn't mean when the banks go down, the market goes down, but certainly when the banks are in play, the market's going higher. But this is a dive down on yield. So we've had the 30-year go from over 8% for the 30-year mortgage to now down around 6%. Quite a big change just in about a month. Pretty amazing. All right. Look at the healthcare on the other side, though. Healthcare is just shooting straight up. Amazing. This is what the S&P 500 on a weekly chart looks like when the Fed prints money. And that's what the Fed is saying they're going to do. And everybody's been waiting for them to do it, including me. I've been early as usual, but here they are doing it. Okay, so this is that check mark that I was talking about, where it went down during COVID. You could see during March of 2020, that 5-week period where it just sold off and basically died, and then came back to life when the market got some free money. And that free money came back into the market and it blew up assets. So if you're in assets like stocks and bonds and gold, Bitcoin, real estate, these things are all going to start flying again. Not in terms of value, because it's the same value, right? An ounce of gold today still buys you the same really nice men's suit that it bought 100 years ago. That's how they always measured gold. What can it buy? It can buy you a really nice men's tailored suit. Same thing today. But the denominator is going down. The value of the dollar is declining, as you know, right? You got inflation at your stores. You got the value of the dollar declining. It doesn't buy as much as it used to. And so when you divide a number by a denominator that's devaluing, you get a higher quote unquote value. It's really a higher price as it goes higher. So yes, things are going to shoot up. The value of them is not shooting up. The value of gold is still the value of gold. The value of a Bitcoin is still a Bitcoin, right? But the value of a dollar in terms of purchasing power is declining. And that's why you're getting this move up in prices, because it takes more dollars to buy the same share of stock, if that's the way you want to look at it, right? Makes sense. All right, real quick. Here's Apple. Apple's breaking through a nice little cup and handle pattern. It's going to push that $200 level. My suspicion is it couldn't handle it yesterday when it went to the 198 level. It came down the other side because it didn't have the volume, but it wants to have the volume. I think next week, if we have any kind of a solid market, Apple goes through 200. And next stop for Apple, in my opinion, the way I read the charts, is 220. By the way, this is not recommendations. This is education, entertainment, whatever you want to call it. But don't take my word for it. Do your own homework. Do your own research. Talk to your own professionals. And then, for the love of God, write some calls against these things so you can get some income while you wait. Because I don't know what I'm talking about, right? It may not go up, right? It may go down. But at least if you're writing income, getting covered calls, we have a strategy called the cashflow machine where we get calls on those things, and we can get cash flow while we wait. It's nice to get paid while you wait. So there's Apple. It's on a breakout. Everything's kind of on a breakout right now if it's any kind of good. Tesla's not as strong, but let me tell you the case for Tesla. Tesla is testing this 250, 275 level, It tested it yesterday on good volume. That tells me that it wants to go back up and blow through that. So I think it's going to blow through that one. 268.94 is the next swing point. It's going to blow through that one because it's a low volume swing point. It wants to go to that 279 level that you see, that little dotted green line there. That's the top of a double bottom pattern. If it goes to 279 and it could do it on any kind of volume, now it's going to go up to that $300 level. That's where we get our real test, everybody. Our real test on Tesla is 300. And I can tell you, the stock is the same price that it was 3 years ago, and they're about to deliver 500,000 vehicles this quarter. That's the amount of vehicles they delivered the whole year 3 years ago, and the stock is the same price. You can't tell me that there's not value pent up in this stock. I really believe there is. That's why I'm a big buyer of Tesla. I'm not sure when you get in if you're not in. I'm not telling you go out and rush and buy it. I just see a lot of positive upside happening in Tesla. It's reversing a lot of trends right now. I hope I'm right. I haven't been right for a while, but sure seems like this chart reading thing is right. All right, enough from me. Listen, I hope you're gearing up for a great holiday season and you're planning on spending some good quality time with the people that you love and make you laugh and crack up until you cry. That's what it's all about. Sharing love with the people that love you. So listen, get ready for a super holiday season, and I hope to see you next week after a great weekend. Have a great weekend, everybody. See you next week on the next weekly stock market update. Take care. Talk to you soon.